Come and get them Hollywood trades. We are dog walking the market once again. Let me go ahead and update this to the new level, but you see what we're doing here and how our markups are always on point. We are bullish again, as I said, so we are seeking again. This is just going to be a quick one because this was something that I had already foreseen. Obviously, we already know that we're bullish, but we know that we need to get a proper Fibonacci kind of, liquidity as well as the correction liquidity. And again, obviously using that low to that high. This is our fib. Again, we know I don't like to keep fibs on the chart. Of course, we hit the fib already here, right? However, we didn't get the imbalance that we wanted. This was just a reaction to this being balanced here, this little thing and all of this consolidation zone. Like I said, should be a consolidation zone because we're bullish and we had a bearish breaker. That is how we predicted the consolidation levels, because a bearish breaker in a bullish liquidity will make you, it's created to make you correct. It's created to make you correct. Fibonacci is an entry level. Fibonacci levels are entry levels, right? So that's why you'll get responses like we got here. But this right here was the entry level plus the imbalance that we were seeking. These two lows, I put this magnetism here because these two lows are not this, these are food on the way to this. That's why this magnet is here, because these are going to be the food. As you see, it hit those, right? Absorbed the buys that would be resting here, and then all the imbalance, of course, and the mitigation of this level here. I wasn't too concerned. I'm not too concerned about that level that it hit, which was here, which was the mitigation point. So the mitigation point would be here and here. If we were drawing all this stuff on the chart, some people may choose to draw this stuff on their charts, but I like to keep it just general, because it's not about the details, about the general idea of where the meat of your responses are going to be. You know what you're looking for. You know what you're looking at. You know what I mean? So this volume profile is not really telling me too much right now, other than there is a liquidity boundary here. Whenever you see, it's like a zone, right? And then you see a change of color in that range, that's a liquidity boundary. This one here is also, and then this is building a consolidation zone along this point of control. Point of control is always going to be a consolidation zone until it builds enough imbalance, which we will see in the actual candle print. It's not printing an imbalance right now. And once it prints the imbalance, then we'll know which way we're going. Again, I do believe that this is the ultimate buy side. I did expect for it to hit both of these together when it went up, but I guess whatever was resting here was a lot of liquidity as well. So there's just a lot of stuff, and we expect these low volume nodes to be an absorption of orders as well, right? So it's tapping towards it, but these are like vacuums. They just absorb order flow. It'll either cause an imbalance and then we'll sit on it, or it'll just absorb order flow. And that's right now we're getting that absorption. We do have a bearish volume, high volume node right here as well. So, this is what it is. We are bearish in this zone, but we're sitting on top of those bears. So we'll get to see whether those bears get out the market here. And if they do leave the market here, mitigating this block right here, this is where all the bullish mitigation is going to happen at. So we are going to get that bullish activity somewhere in the mid range of this candle right here. That's what we're looking at next. I didn't plan on doing this, but it just is. I have to warn the market about the consolidation range here. If you do take your plays, take them neatly from your buy zone and from your, this is not a sell zone as well. This is just a retracement. Again, we're seeking that Fibonacci retracement here we're gonna want to see what happens in this range around these two levels, this level in this zone. Obviously, we're seeing on PLC. So again, the markups are sovereign. We didn't really mark anything up today, just now, because everything is still here and everything is still functioning. What we have, when you have good markups, they'll function for multiple sessions, and that's what we have here. So the volume is going to wane going into the afternoon on this very chart. We may get a bullish close here, and then that's when we'll resume bullish and take all this out. There is more structure above here as well, which is here. So after we take this out, we are eyeballing this and the rest of this imbalance here. Let me go ahead and draw that out. We're on the hour chart. I usually don't try to be too much of a stickler for what's on this time frame, but let's go ahead and just get eyes on that so we know, because there's a pretty wide gap. There's a level here, but there's a wide gap of area. There's a huge opportunity for anybody trying to get in on that move there. If this imbalance will hold us and this bullish block will hold us in its body, then we'll get this easily, and that's just an easy forecast there. So we'll tap back in. This is a Hollywood quick cap, and again, that bar method course is going to be out soon. Heads up for that, and that Hollywood price motion handbook is going to be out soon as well. Keep a heads up for that.